The current live price for SMX Security Matters PLC is trading at a staggering $458.85, showing an intraday explosion of approximately 225% as of this very moment. The market opened today at roughly $266.01. Initially dipped to a low of $225 and has since ripped upwards in a violent vertical trajectory, touching highs of $475. This is not normal volatility. This is a catastrophic repricing event that is likely triggering circuit breakers and halting trading intermittently. If you are looking at your screen wondering if your data feed is broken, it is not. You are witnessing a microcap anomaly that defies standard logic, where the tension between a company's history and its immediate market mechanics has snapped. Most investors looking at a chart like this expect to hear a story about a sudden buyout, a cure for a disease, or a massive contract with a government entity. That is the expectation, that price action of this magnitude must be justified by fundamental alteration of the business. You see a stock fly from the $60 range yesterday to over $450 today, and you assume success. The reality is far more complex and dangerous. What you are seeing is likely a technical short squeeze combined with a liquidity vacuum, exacerbated by a history of massive reverse stock splits that have left the floating supply of shares incredibly thin. The reality here isn't necessarily that SMX has fixed its business overnight, but that the market structure for its shares has broken in a way that favors extreme volatility. The smart money isn't buying value here, they are playing a game of musical chairs with a supply of shares that is almost non-existent. When you look at stocks like Tesla stock or Nvidia stock, you are looking at liquidity oceans where billions of dollars can move without breaking the chart. SMX is the opposite. It is a liquidity desert. This company has undergone a series of reverse splits, consolidating shares repeatedly to keep the price above Nasdaq's $1 minimum requirement. Just in 2025 alone, we have seen multiple consolidations, including a 1-for-75 split in July and others following. When a company does this, the number of shares available to trade shrinks dramatically. If you have a sudden influx of volume, perhaps driven by retail traders on the Robinhood app or aggressive day traders using interactive brokers, there simply aren't enough shares for everyone to buy. The price has to go vertical to find a seller. This creates the illusion of immense value creation when in fact it is often just a scarcity of paper. However, we cannot dismiss the catalyst entirely. The spark that seemingly lit this powder keg was the recent announcement regarding a $111.5 million equity purchase agreement and a renewed PR push regarding their molecular marking technology. The company recently released statements about rebuilding supply chain confidence, specifically targeting the gold sector and ESG, environmental, social, and governance compliance. They claim their technology can embed a molecular truth into materials, gold bars, plastics, rubber, that survives recycling and refining. This narrative is potent. In a world where supply chain transparency is becoming a legal requirement in the European Union and elsewhere, the idea of what SMX does is incredibly valuable. The contrast, or the rub, is that their financial history has been a relentless destruction of shareholder equity through dilution. Investors who used a Schwab Intelligent Portfolio or a Standard Fidelity Wealth Management account to buy this stock a year ago would be down over 99% despite today's rally. That is the brutal math of reverse splits. Let's strip away the hype and look at the actual trading mechanics occurring today. The volume is surging, but because the float is so low, every buy order acts like a match in a gas station. If you were trading this on a Fidelity mobile app or a SoFi trading platform, you might notice wider than usual bid-ask spreads. That gap between what you can sell for and what you can buy for is a warning sign. It means market makers are protecting themselves against the very volatility you are trying to profit from. Institutional activity here is likely minimal in the traditional sense. You won't see Vanguard or BlackRock building a long-term position at $450 on a stock that was $60 yesterday. Instead, you are seeing high-frequency trading algorithms and stat-arb, or statistical arbitrage bots, reacting to the momentum. They see the price moving, they see the vacuum in the order book, and they accelerate the move. This brings us to the core business, which is often overshadowed by the stock's chaotic behavior. Security Matters, or SMX, bills itself as a tech company for the circular economy. Their pitch is fascinating. They use a chemical marker system that functions like a molecular barcode. Imagine you produce a ton of plastic. SMX marks it chemically. That plastic gets turned into a bottle, then recycled, then turned into a park bench. At every stage, a scanner can detect the SMX marker and verify the origin of the material. This solves a massive problem in the green economy: fraud. Companies lie about how much recycled material they use. Suppliers lie about where their gold comes from. SMX claims to solve this with physics and chemistry, not just paper trails. They call it the plastic cycle token in some iterations, linking the physical marker to a digital blockchain record. It sounds like the holy grail for companies like Apple or Nike that need to prove their green credentials. But here is the contrarian take that you need to consider before you get swept up in the FOMO, fear of missing out. Great technology does not always make a great stock. The history of SMX is a history of burning cash to prove this technology works without generating the massive revenues needed to stop selling shares. The $111.5 million equity purchase agreement mentioned in recent news is a double-edged sword. On one hand, it gives them a runway. It means they're not going bankrupt tomorrow. On the other hand, equity purchase agreements usually mean the company can sell more stock to the investor over time, which creates selling pressure. Today's rally might be the market reacting to the survival aspect, the realization that SMX has the cash to keep the lights on, but the long-term investor has to worry about that cash coming from their own dilution. If you are using an individual brokerage account, perhaps through Fidelity Investments or even a newer platform like SoFi Invest, you have to understand the specific risks of microcap stocks that have just undergone reverse splits. There is a phenomenon known as post-split selling. Often, after a reverse split, the price drifts down as legacy holders finally exit their underwater positions. Today's action is a violent rejection of that drift, a short squeeze where those betting on the drift were caught off guard. If you are shorting this stock on Interactive Brokers, where borrow fees for hard-to-borrow stocks can be astronomical, you are likely in a world of pain today. The cost to borrow on a stock like SMX can skyrocket to 100%, 200%, or more annually. If the stock doubles in a day, the margin call is immediate. This forces shorts to buy back shares at any price, fueling the fire. Let's look deeper at the gold narrative they're pushing. The press release about how a single counterfeit bar could trigger a panic is brilliant marketing. It plays on the fears of the global financial system. Gold is the ultimate trust asset. If trust in gold breaks, the system breaks. SMX inserting itself as the guarantor of truth for gold is a massive addressable market. If they can get even a fraction of the global bullion market to use their markers, the company is undervalued even at $450. But that is a massive if. The gold industry is ancient, conservative, and slow to change. Changing the standard for how gold is refined and verified is not a software update, it is an industrial overhaul. Investors betting on this narrative are betting on a systemic shift in how commodities are traded. Now, I want you to pause for a second. Comment below how many shares of SMX you currently hold, or if you are unfortunately one of the people who held through the reverse splits. It is important for the community to see the real impact of these corporate actions, not just the percentage gains on a screen today.